Stocks pause after the recent rally. Metals and IT lead the gains, while capital goods and power slip, and mid-caps outperform today.
A weak quarter and guidance along with governance concerns hurts Aurobindo Pharma, while margin pressure haunts Alkem, and fresh litigation over Revlimid casts a shadow on drug makers like Dr. Reddy and Natco Pharma.
A mix of earnings and guidance fuel rallies in Info Edge, also LIC, MedPlus, Glenmark Pharma and Ircon, while disappointment weighs on Sun TV, Z Entertainment, Astral and BHEL.
RBI Governor Shakti Kanta Das says he expects the October Consumer Price Index print to be under 7%, suggesting a cooling off of inflation. On defending the rupee, he says India's forex reserves have been built for such rainy days.
Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is Pavitra Parekh. Well, taking a look at the market, my color is exactly in tune with the market today. Not anything to cheer about, even though it's holding way above the 18,000 level, which it conquered last week. Well, Nifty 50 is really finding it difficult to be on the green line. In fact, from the high point of the day, it is now at the lowest point in the trading session. So at the moment at lunch hour, looks like there is sluggishness which is really coming in almost on the flat line or on towards the negative side of the market. But from the high point of the day, if we really take a look at the overall trajectory, well, not much movement. It has been 70-80 points move. So therefore, quite a tight range approach when it comes to the overall market, Nifty 50. But take a look at Bank Nifty, that is underperforming by a slight bit. Mid caps have also gone on the underperformance mode, and therefore the advanced decline ratio has tilted towards the declining side at the moment. So there is weakness as well as tentativeness more in the market at the moment, Pavitra.
Oh, absolutely. And you know what, after the kind of week that we had and the kind of Friday that we saw, perhaps this kind of slowing down or a pause is really nothing much to complain of, right? But today, if you take a look at some of the other Asian markets, they're holding up just fine. So Hang Seng is over 1% in the green. It's almost 2% higher. Taiwan is holding up with gains of over 1%. So a lot of the Asian markets are doing quite well. For us, it is metals and IT which are really doing a bunch of the heavy lifting today. Hindalco is, of course, doing well because of the better than expected earnings. Some of the other names on your screen, a lot of the IT bigger names finding themselves in the top gainers list. And on the downside, it is really in the past hour or so, it is the FMCG stocks which have slipped, while pharma has seen a bit of a recovery. So do keep that on your radar. In terms of cues, watch Brent. You know, we are seeing what's going on over there with the China reopening. So that will be important to watch, and some key earnings as well coming through. But with that, let's move on and talk about the top stories then, and some stocks which are reacting to their earnings. Hindalco reported a weaker set of second quarter earnings, but the numbers were a tad better than expected. That is what has got the stock excited in trade. The copper EBITDA came in as a surprise. So earlier today, we spoke with Satish Pai, who's managing director of the company. Listen in to what he had to say.
Novelis, by the way, had a very decent Q2 at $506 million EBITDA. And they have said that, you know, they could be facing headwinds of about $75 to $125 a ton in Q3 and Q4. Now, these headwinds are coming from inflationary costs. It's coming from the fact that LME and premiums are down, which is dragging their scrap benefit down. And it's coming from the fact that there are, you know, energy uncertainties in Europe in particular. So it would be fair to say that probably Q3 and Q4 will help us shed some of these negative headwinds that we are seeing, and we still remain committed to our $525 per ton guidance that we give. Single biggest thing that has impacted our cost of production is the availability and price of coal. So I think that, you know, we have started to see post monsoons the coal availability and the pricing situation starting to ease, and we are cautiously saying that 2 to 5% reduction in cost of production will be seen in Q3.
All right, Satish Pai there talking about Hindalco and the prospects there. The stock is doing phenomenally well in trading session today and is showing consistent gains. But don't get fooled by it, because you know how metal has been downgraded because of the various cost pressures as well as prices coming down. So year to date, price movement will show that Hindalco was at about 630 levels just in March this year. And yes, it is now trying to pick up with all the negatives now getting factored in. Next on our radar is Bharat Forge, and it has really nosedived now over 3% down in trade after the results just got announced a few minutes back. And Sonia is right here with Bharat Forge reaction on the numbers, as well as why is the stock reacting so negatively to the earnings, Sonia?
Well, the key reason for that is the fall that we've seen in the margins. So the margins for Bharat Forge are under pressure year on year, as well as much below what the street was estimating. The margins are down 590 basis points on a year-on-year basis for Bharat Forge, coming in at 24.3%. Now, there are, of course, operational pressures that all these companies are facing because they haven't been able to pass on all the raw material costs. But in addition to that, some portions of Bharat Forge's business, like the oil and gas space, as well as the industrial business, has been under pressure for the last few quarters. So maybe that has exerted some operational pressure as well. The profits too are down by almost about 14% and the core EBITDA number is also down by 6.6%. So that's the disappointment. Despite a good set of revenues, despite a good top line growth of 16%, they are not able to get back to the 25% plus margins that they used to see earlier on. Now we're waiting by for the management's commentary. It has been on the cautious side in the last couple of quarters. So any indication of further pressure on margin is something that could spook the stock further. But this is purely on account of operational pressure that the stock is reacting right now. Back to you.
All right, Sonia, thanks a lot for getting us the fine print from Bharat Forge's earnings. But with that, let's also talk about another commercial vehicle maker, that's Ashok Leyland. This one is gaining in trade, and the company posted a solid set of Q2 earnings, clocking in a beat on all parameters. So the revenue jumped 85%. The margin is also expanded to 6.4% versus the 3% that we saw last year. Of course, this is on a very low base. But earlier today, we caught up with Gopal Mahadevan, who's CFO and whole-time director at Ashok Leyland, to understand his expectations from the second half of the year. Listen in.
On an annualized basis, I think the research reports that all of us are getting show that there'll be about 22 to 24%. And I think there is still a lot of growth left in the commercial vehicle industry, simply because what has happened is after 2019, the industry was a little flattish, and after that, it has degrown severely. Whereas the economy has started to grow. I mean, India is one of the higher growth or highest growth economy that the world is looking for.
All right, that's from Ashok Leyland, and flashing on your screen, Shakti Sugar's results got announced and the stock really zoomed up because of the YOY loss being converted into profits and EBITDA margins also showing a huge amount of improvement on the positive side. So keep that on your radar. Moving on then, also my colleague Vivek has gone through some data on how mutual funds have been rejigging their portfolio in the month of October. Vivek, tell us all about where a lot of concentration is going and what are investors and mutual funds picking now.
Well, absolutely. So what we've actually done is we've analyzed the data, and what we've come up with is the key insights as to how exactly have mutual funds deployed their funds in the month of October. So what we've done is, we've categorized it into three categories, the large cap, the mid cap, and the small cap. So in the large cap category, the three key additions that we're seeing across mutual funds has been IndusInd Bank, Reliance Industries, as well as Infosys. On the other hand, where is it that they've trimmed positions? Axis Bank, Coal India, Bharti Airtel, and HCL Tech, other stocks where they've actually trimmed their positions. Looking at the mid cap space, have a look at some of the names that they've added. Tata Chemical, Zee Entertainment on the back of the corporate action, Gland Pharma, despite multiple reports indicating that the parent company is in a bit of trouble, and Delivery. These are stocks where they've actually made key additions. On the other hand, key trimming of positions are actually NMDC, Voltas, Federal Bank, Indraprastha Gas. And also keep in mind, when you say a mid-cap, the mid-cap is actually a company with a market cap between 10,000 to 40,000 crore. Anything below that is a small cap space. And within the small cap space, which are the key additions? RBL Bank, the new listing Electronic Smart, as well as Karur Vysya Bank. On the other hand, the ones that they've trimmed include RITES, Welspun Corp, Metropolis Health, as well as Indiabulls Real Estate. These are the names that they've actually trimmed from their holdings.
All right, Vivek, thanks a lot for taking us through all of those names and telling us what the mutual funds have done in terms of adding stocks to their portfolio. But with that, we're going to get into a short break now. When we come back, we get you excerpts from CNBC's exclusive conversation with Kumar Mangalam Birla, sharing his views on the cement industry as well as the paints business. So stay tuned for that. Hey guys, welcome back. You're still tuned into Business Lunch. Now, the CPI print for the month of October is due today. And according to a CNBC-TV18 poll, October's CPI is seen at 6.73%. This is versus the 7.41% that we saw last month, that is in September. Core inflation is seen at 5.9%, while food inflation is expected to come in at a range of 6.9% to 7.4%. Now, RBI Governor Shaktikanta Das also said that October's inflation will be below the 7% mark. He also says that the RBI is sticking to the 4 to 6% inflation band and should not think of shifting the band. So speaking to the Hindustan Times Leadership Summit, he also defended the central bank's intervention on the rupee. So let's listen in to what he had to say.
Our estimate is that India will this year grow by about 7%. The IMF has projected that India will grow by about 6.8% in the current year. And that puts India among the fastest growing major economies in the world. We have a major challenge with regard to inflation, but comparatively, if you see our target, the upper ceiling is about 6%. The last inflation number which was released for September, the inflation was 7.4%. We expect the October number which will be released on Monday, we expect that to be lower than 7%. Any inflation above 6% is detrimental to growth. So therefore, 6% has been kept as the upper tolerance band. And the fact that we have a tolerance band, between 4 and 6%, that gives RBI enough policy space to use during times of stress. We picked up these reserves only for this rainy day. And when it rains, I have said it earlier also, you have to pick up your umbrella and use it. We didn't pick up reserves just to keep it as a showpiece in the Reserve Bank of India. And even at this point of time, our reserves are very comfortable. So the first objective of our market intervention in the forex market is to ensure an orderly movement of the exchange rate. Second is to anchor market expectations.
All right, and flashes on your screen. Bharat Forge is one stock which is on our radar right after the margin pressure that was reported. The stock had plummeted, but there is some pacificatory statement really coming in from Baba Kalyani. He's saying that higher end market demand will be higher in the month or in the third quarter compared to the second quarter, addressing that margin pressure issue. Keep that on your radar. Let's take it straight across to one big corporate voice on the show then, and opinions coming in from chairman of Aditya Birla Group, Kumar Mangalam Birla. Now, in an exclusive conversation with CNBC, he talks about the fashion retail space and his views on Aditya Birla Fashion's online business strategy. Remember, this is one company in their entire portfolio which has done maximum M&A during the COVID period. Listen in.
I also want to talk about your retail arm, fashion retail, that is, because that's getting into the D2C segment, direct-to-customer segment. What are the future plans here?
So it's a very interesting space. My son actually is spearheading that. You have a lot of brands that now don't sell through physical stores. They're selling only
everything has gone online.
And they're doing well. So the idea is to come in as an investor, invest with them and help them grow. There is, I'd say, almost a scientific way of identifying these opportunities, using data, which has become so big. And since we are in the fashion retail space, this is about investing in startups or businesses that are just maybe a couple of years old in that space, which have promise, which have shown that they have customer traction that is borne out by data. And so it's a different segment of the overall business of fashion retail.
So you're focused more on pushing forward the e-commerce side of things as far as fashion retail is concerned?
I think that's going to be an important leg going forward. The physical part of the distribution, remains as important. I think we've come to understand that when you say digital, it actually means in most cases phygital, because you do require a physical presence, in this case stores across the length and breadth of the country, to really make it a holistic business model.
All right, that is Kumar Mangalam Birla on the fashion and retail business. But with that, let's move on to another exclusive. Hiring levels are off after historic highs and economic uncertainty threatens pandemic progress at the workplace. This, according to a LinkedIn report. The red-hot job market of yesterday, which gave employees great bargaining power, flexible work and opportunities to choose and change jobs at will, has today cooled amid recession fears and layoffs. Earlier today, Shireen caught up with Ryan Roslansky, who's CEO of LinkedIn, to discuss how LinkedIn is shaping itself amid the great reshuffle and the outlook for the Indian market. Listen in.
India right now is the second largest market in terms of engagement on LinkedIn. We have roughly 97 million members. And I've only been on the ground now for a couple hours here in Bangalore, meeting with our amazing employees and some customers. And you know, what I can feel like right now is though we may be in a bit of a lull. Where India sits in the next 10 years feel like it's really being decided right now. And this doesn't feel like a country which is just trying to create a playbook or figure out what to do, but a country that's actually really executing on a new path to economic growth. So I'm really excited to be here and just learn more in person. The revenue in India is growing at 50% year over year, north of 84% year over 2 year. We're closing in on nearly having 100 million members in India, but it goes well beyond that. We have offices in Bangalore, in Delhi, as well as Mumbai, but we have a significant R&D presence actually. I think that as long as, you know, at LinkedIn we have principles around our talent strategy, our strategies are always moving around. We have no plans. We haven't announced anything as it relates to any kind of layoff or, you know, kind of across the board for our company. We have put ourselves inside of a hiring freeze right now for various parts of the company. But again, like every other leader, we're just continuing to navigate the global strategy that we need to keep the company going, to create this platform that so many people are finding value off of right now.
All right, that's LinkedIn talking to us. And Abbott is one stock that we'll keep on our radar, about 3% up in trade. It's quite a expensive stock on that front, over 19,900 rupees per share, and that has moved by over 3%. So that's a big move coming in as an earnings reaction. So keep that on your radar. On that note, we'll slip into a short breather on the show. But remember, leaders of G20 group of countries congregate in Bali and Indonesia to address issues of global importance. More on that story after this very short break. Stay tuned. Welcome back. You're watching Business Lunch. Market is stable on the flat line, but just that Bank Nifty has improved a slight bit, and HDFC Bank is the counter, the heavyweight to be watched out for, which has gained in the last few minutes of trade. Moving on then, world leaders arrive in Bali for the G20 Summit, and the war in Ukraine and its economic fallout is expected to dominate the discussions there. And this will be the first time that US President Biden and China's Xi Jinping will meet face-to-face since Biden took office. In fact, the Indian Prime Minister Narendra Modi departed a short while back for the island nation, and at the closing ceremony, Indonesia will hand over the G20 presidency to India. In fact, CNBC-TV18's Abhishek Jha is in Bali and had sent us this report from the summit headquarters a short while back.
Prime Minister Narendra Modi is reaching Bali on Monday night to take part in this year's G20 summit level talks. Prime Minister will have participation in 3 sessions focused on health, energy and food supplies across the globe. In the aftermath of COVID pandemic, the world has witnessed the need to create a resilient infrastructure in the health sector. Also, in the aftermath of Russia-Ukraine conflict and the COVID pandemic, on top of that, has been a very challenging times if we talk about supply chain disruptions in all sectors of manufacturing. Key components are unavailable in the world market. The food supply is in short. The price of commodities, international commodities, especially crude oil, has skyrocketed, putting inflationary pressure across the economies in the globe. Also, the availability of fertilizer and the conflicting situations in some part of the globe has been a worry for the G20 Leaders Summit. Will the G20 leaders talk about these issues, how the problems should be solved? For this time, India is going to have a very important participation because India is going to have the presidency of G20 23. Starting from December 1st, India will be part of Troika, that will be Indonesia, India and the 2024 presidency, Brazil. Prime Minister Modi has earlier outlined his priorities for G20 23 presidency when he has said that health infrastructure is one of the key components of the world discussion that leader should focus.
All right, that is the setup for the G20 conference. We're going to keep bringing you updates, but we do also have to bring you up to speed with some grim news which is coming in from Istanbul. 6 people were killed and over 81 injured after an explosion in the city's central Istiklal Street on Sunday evening. The Turkish government imposed a broadcast ban on coverage of the explosions. Social media users in the country also complained of internet slowdown following the attack. Speaking to reporters early this morning, the Turkish Interior Minister said that the suspect who left the bomb has been arrested along with 21 other suspects.
All right, quite a grim news there, and ending the show on that particular grim note. With that, thanks so much for tuning in to Business Lunch. Mid-Cap Radar comes up next.